G'day everybody, Brian here from quantlabsnet.com. In this video, I'm not going to teach you end to end on how to build a real-time HFT system with Python. I'll give you some guidance here. There's lots of videos out there to show you different coding snippets and very long videos to show you how to get through stuff like this. So can you and is it suggested to build a real-time HFT system with Python? Um, I'm going to break it down in a nutshell here. Um, and if you got other advice, let me know. I'm interested in comments. If you really like this stuff, subscribe to get more stuff like this. I can go deep in it. It really depends upon what you guys, you folks want. I would say you guys. There are female coders out there, I know. But you folks, I'm trying to get into that notion. Anyways, um, yeah, so just comment and subscribe. That's all I can tell you, just like a regular YouTube channel. But let's get into this. So I don't want to spend too much time what is HFT. Usually most people do know what HFT. It's all about speed, automation, market impact. We'll just leave it at that. What are the challenges here? Here we're dealing with low latency. We're dealing with efficiency of data management and complex algorithms. So what are some of the highlights that Python brings to the world of things like high frequency trading? Well, the good thing about Python, it's really a more of a prototyping language. There's a speed of development to consider. Obviously, it's not so easy in something like C++. Code generation with AI really helps there, but you still got to know the languages, whatever you participate in. So it is, you can't just chat GPT your way through this. You got to be able to really understand the coding. Um, just for not just for self-interest, but also if you're planning to do this as a career path. So what are the strengths with HFT? As I said, with the speed of execution, and because Python's more of a prototyping language, takes a lot less code to write to test something. That's what Python brings to the table. There's a lot of mature and robust libraries out there. I mean, Python's more than 10 years old. A lot of core libraries that I'll mention have been out there. So there's a lot of maturity where you can use a lot of these libraries with confidence. Uh, and obviously with Python, it's a lot easier to use than something like Python or C++ or something more advanced. So I got lots of videos on how to do this. As I said, there's a lot of other videos on how to do this. This is just the guidance. Um, So to set up and to do this as a setup with the appropriate libraries or packages in Python, um, you can use different IDEs. There's free ones like VS Studio. There's more sophisticated ones from Microsoft like Visual Studio. They're still free. Depending upon what you're using in terms of libraries, you will move into the more paid if you're going to use like a JetBrains IDE. Um, and like Python. There's other ones as well. I find the open source ones can be kind of limiting, and they're a lot more convoluted to work with, a lot more, let's just say, complicated. If you can go with the paid, go with the paid. It's faster, it's easier. The essential libraries and packages are various. So there's the key ones that a lot of people use: the pandas for data manipulation, NumPy for numerical computation and analysis, and Matplotlib for the visualization. Those are the free ones. There's lots of some other ones that other people may use, but those are standard. So then we get into the file project structure, file organization for the different structured approach. Here's the problem with Python. It's a scripting language. It's an interpretive language. So I've seen people use and try to use object-oriented type of programming in Python. I'm not a fan of it. I find it very overly engineered and just very confusing. If you're trying to look at the Python interactive brokers API, it's a mess to work with. I don't like it. I think it just adds layers of complication and whatnot. So this is what I don't like about Python, to be honest. But if you're trying to write a sequential type of script, I find that can be very useful, and you create your different scripts for the different components that you're interested in. I've got an older course on how to do this with uh, with crypto, the different components. It's old 2.7 Python, but it can show you all the different pieces you can use for, yeah, even not high frequency level, but quick development for a very successful crypto trading bot. And I think the principles are the same even today. And then I didn't realize with what I went through the course that I just did the code generation for visualization for JavaScript. Wow, oh man, JavaScript's really good for that. And you can just create your JavaScript with your wrapped around HTML and run it within a browser. I mean, it's so limited, and you can run it so easily online as well. To me, that's a great combination using something like a Python as your back end, maybe JavaScript as your front end. That might be a good, interesting way to do it to get something up quick and dirty. But if you're trying to do it for career, obviously you got to move into C++. I know I'm not being very helpful here, very specifics, but I only have so much time to do this. And you're not going to get a complete answer. But I do have resources available if people are serious about going through this. So let's talk about the data acquisition and the pre-processing. This is where things like R, Python excel. There's no doubt about it. For real-time market data, you can use Python. I find to accomplish that can be overly complicated, but you can simplify it by using more sequential style than an object-oriented style. Everybody's got their own preference. I like simpler. Simpler also means it's faster, and it's readable as well for other people. There's different APIs available. There's a ton of third party with coding examples. You can use web scraping. I'm not a fan of it. You should go through an API that you actually pay for. A lot of the paid data is obviously better quality, less gaps. If you're trying to do it through something like Yahoo Finance or some other, I personally think a lot of those gaps are in there on purpose to really ensure that the data is no good, and it's kind of useless depending upon your time frame you're using. Also, from a high level, it may kind of work, but I still wouldn't trust it. And you're better off to go through an exchange if you can pay for it, or the actual broker. If you're using something like interactive brokers, you got to pay for the data. There's other resources as well, like IQ Feed is seems to be a good standard still, and a ton of others as well. When it comes to data cleaning and the pre-processing, as I said, can be really pain in the ass. You can do all kinds of NumPy tricks, so you can look out for those. You can all do the same thing, and pandas as well. Lots of tricks there to kind of remove a lot of the gaps and a lot of the duplicate data. What do you do with the outliers? Sometimes the outliers can be good if you're using a statistical approach, using a normalized distribution chart or plot. You can see those outliers on the right tail, or uh, the tail on the right side can be very good. That's what some people are looking for the extreme profit, or on the other side as well, using the tail analysis for shorting opportunities as well. So there's that as well. And then, of course, we need to normalize the data as well to have a fair comparison between that asset and this asset when their prices are totally different, uh, or you're trying to use it for some kind of analysis purpose as well. So there's another approach that's used for feature engineering. Feature or factor, well, it depends, but when I hear feature, it's maybe factor. Um, you're applying all the different styles of numerical analysis, putting it into another model, I guess you could call it, and then you build everything around ranking. That can kind of work, sure, if you're trying to use it. I do it as well for stocks and ETFs using just simple Sharp, right? Sharp ratio. So there's that kind of approach. There's different uh, indicators that you use for technical analysis. If you looked at my course for being in the smart bucket for what the pros would use, they don't really use indicators. They're using different approaches I mentioned in a previous video, using ratios on on supply and demand ratios on certain things, and looking for opportunities to trade on instead of traditional indicators. So a lot of the indicators are like technical analysis, let's say, are kind of used for spot market, and they can lag. A lot of them can lag as well. That's another problem as well. So you got to be aware of that. Um, so when you're building out a potential HFT algorithm, obviously you're going to lose a lot of backtesting strategy development. You'll put it through simulation, using historical data and evaluating it. Listen, the best way to really test a strategy, a bot, a model, whatever you want to call it, people get paralyzed with the analysis paralysis. They'll put it through some back testing framework and thinking, oh, it works. But when they realize they put it to live money, it doesn't work. A lot of that's just not the best approach. The best approach, in my mind, is to just put some small amount of money on something and see how it performs. Because there's a lot of manipulation in the markets that people don't see, and typically, especially when you're dealing with a lot of volatility. So if you're trying to do a mean reverting style type of um, strategy, yeah, you will need to factor in unpredictable volatility. But again, when you look at the smart money, the volatility can actually help you by studying things like implied volatility and what it means and be able to quantify it. And not just that, but able to kind of somewhat properly forecast that with a downside protection. But alas, the technical indicator, technical analysis will never follow that and understand it. And there is a lot of fundamental approaches to this, but it's beyond that. Again, being part of the smart money bucket and how they go about their trading and building out their algos. And then we get back into back testing, optimization, tuning the parameters. You could do that forever until the day you die. I know people have worked on indicators and models forever and ever, refinancing their mortgage in the house, and they do it for years, spend hundreds of thousands of dollars. It's just not a wise approach. They'll analyze the results and go, oh, I'll be closer this time, and something else blows up, and they just get stuck in this back testing and this doom loop of optimizing and back testing when that's not how to really do it. You want to do it like, as I said before, studying the futures and options market and knowing how the smart money does it. Okay, because it's a lot simpler. It is more sophisticated, but once you change your view of the market and how it's really done and how they use the retail traders to their advantage. But again, people argue that till the day they die, and it's their money. And I always say, it's not my money, and I don't care, right? So that's just something I believe in. So when it comes to deployment and consideration, okay. So as I said, for deploying on an HFT system in Python, nothing wrong with that, but you may get not really HFT, high frequency trading, on a sub-second. You could probably throw a lot of hardware on it, GPUs and all the different processors. You could do it in the cloud. It'll cost you a fortune, but you can do it. Or you can do it in C++ to minimize all that processing because of all the lagging stuff that comes with Python. You can do that. There's cloud computing. I've talked about the different options out there. If you watch my most recent webinar, I've talked about cloud computing with providers like Vultr, Linode. Those are cheaper alternatives to get in the same data centers as where a lot of the exchanges are in. You can get your own dedicated server virtually in these environments at a very low cost. And if you're willing to pay for it and you got the account size, yeah, co-location is always an option as well. So how do you do the monitoring and maintenance of this? That's where you got to build maybe some kind of front end or a log that you're using to be able to track this on a log. You want obviously the big button to be able to kill everything when you're on a mass loss. So you have to make sure you have that built in. You have to obviously debug it and make sure that sort of thing works. There's proper error handling, and that can be a real pain no matter what language you can work with. You can use all the best IDEs in the world to try to help you there, but there's always going to be that little scenario that's going to crash your little system and preventing working, and especially when you have open positions when that's happening. So you got to build in when you see those kind of exceptions, be able to be either exit a trade to prevent further losses because of that, and your system crashes, but yet you have open positions. You got to build for these scenarios. And that's where you got to know the programming language, but you also have a very, very solid understanding of the systematic approach to develop these sophisticated systems because this is live money we're dealing with. Then there's ethical and regulatory. Most of the brokers will have their rules set in place so you cannot manipulate the ecosystem that the brokers offer you. Same with the exchanges. I think the obviously the exchanges may be a little more liberal, but you got to be very careful on that. No quoting, stuff quoting, or that sort of thing. What typical unethical um, firms are using, but they can go through their fancy schmancy dark pools and hide their level of training, but that costs millions of dollars to get access to. Obviously, there's order book manipulation. I that's if you're on the institutional side of things, and there's the legal compliances that come with that. If you go against it, well, you may get a nice little fine. Just things to consider from a high level in a very short video. Hopefully, I'll help you out and you take away something from it. And if you're experienced on this, please share your feedback on it and join the channel by subscribing as well. Thank you for watching. And if you like what I do, go to quantlabsnet.com in the description. Look under the tab and you can join my newsletter. On top of that, you can talk to me one on one, and I'll put a link in there on whatever your messenger is. And blah, blah, blah. Thanks for watching. Have a good day.